Hello and welcome to the Credit Union Connection. I am your host, Sarah Snell Cook. We're changing things up a little bit. Gonna see what you think of this introduction. Of course, let us know. You can always hit that subscribe button on YouTube or on the creditunionconnection.com. But I was joined a couple weeks ago by SavvyMoney CEO JB Orecchia, and we talked so much about state lending and financial education. We talked personalization and data and SavvyMoney's new Get My Rate service, which demonstrates the power of that personalization and the power of that data in financial wellness and for marketing loans to members. So take a look. So right now, delinquencies and collections are up among credit unions and lending is slow. There's liquidity crunch. Of course, people do want to make deposits and credit unions desperately need the deposits. But so where do you see lending, savings, the rates going by, say, year end or maybe a year from now?
Yeah, so over the last year, we saw an increased focus on deposits for sure. There were deposits leaving institutions. As you know, we had a little bit of a banking crisis. I think folks were a little bit concerned, but credit unions were offering, great rates on deposits, and so we were able to lean in on that and actually market deposits in our product and drive a fair amount of deposit volume. The interest rate situation changing, I think, is going to be good for all consumers. Number one, as interest rates come down, that's going to be less of a burden on the consumer. Those payments will be less, right? The way our tool works is that we'll identify as interest rates are dropping, the ability for you to save money through your institution. So whether that be consolidating credit card debt or refining a car, all those opportunities are going to present themselves. What we're seeing also is that lenders are starting to really lean in on the lending side. Whereas, 12 months ago or even 8 months ago, they kind of retracted a little bit and they said, hey, we got to shore up our balance sheets. We need to do more on the deposit side. But going forward, we really want to now focus on lending. And as interest rates start to drop, we want to be out ahead of that and be able to highlight those opportunities for consumers. So I think given credit unions are competitive on the interest rate side with loans, they're really in a great position to consolidate debt or offer refinance opportunities to those consumers. And then from a financial wellness standpoint, if we're able to help those consumers work their credit up and actually see the impact to the rates they're being offered as they reach new credit bands, that's going to be super powerful because now there's a means to an end. Now there's an opportunity to really save money. And I'm motivated now to get my score up because I know that's going to help me save on interest and save on the money that's going out the door.
Right. The people who are just coming of age now are really learning what interest is. When I, at that age, it was much lower yeah, than it is today. And so, some of the key issues, of course, right now are the economy and inflation and rates. And a big piece of that is the credit education part. It's not just financial wellness. People, it's not just savings and budgeting. It's wise use of credit also. So, how do we as credit unions and other community institutions improve that? What's effective? Have you found?
Yeah, so Sarah, we do a few different things in the tool. One, we do a financial checkup, which allows you to enter your income, all of your debts, and actually it pulls in your credit information, and we get some sentiment from the consumer on how they feel about different things, and then give them very actionable content to help solve those problems, right? And benchmarking that if you're making this, and you've got this going out in discretionary spending or this going out in your housing payment or your auto loan, you're over indexing from where your income is. So we need to tell consumers, hey, maybe you shouldn't have $1,000 auto loan. You should probably have something more in the line of like $600 payment on your auto loan. I'm just using that as an example. We show that benchmarking data based on where their income is. And then as it relates to their credit score, we have two things in place. We've got action plans and goal setting. So if I want to reach, let's say my credit score is 680, and I go, well, I want to be 825. Say, whoa, 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 I want to be 825 too, but let's get from 680 to 710 first. And so we create increments that are reasonable, set reasonable goals, and then these are the things you need to work on. And then you get confetti when you hit that goal. And then what happens is you set a new goal. And then you have a new set of things that you need to work on in order to get to the next level. And so there's power in that incremental progress that feels rewarding to the consumer for kind of making up ground in terms of their situation. And then they're also going to see, as they do that, they're going to see the interest rates change in the tool. And there's a double benefit there. One, if my score is going up and interest rates are on the way down, that I'll see the benefits of improving my credit. The other benefit to the institution for improving credit is risk, right? So if I can improve my credit, I'm less likely to go delinquent. So if I can get my consumers actually focused on improving their credit, then I'm also going to have less delinquencies in my file.
Yeah, and so much is available to credit unions in the data that they already have, right? In about their members. And so what can we see in that data as how you talked a little bit about it already, but what can we see in that data as how to better assist them?
Yeah, great question. First of all, I want to see, where are my members borrowing, right? So I want to understand that, but I want to see where my members are borrowing as it relates to what institutions, by what credit band. I also want to see how they're improving their credit. So we actually track by credit band. Where did you start and where are you now? Did you move up one credit band? Did you move up two credit bands? And I have a lot of backup data that I can send you on institutions where they've been able to really move the needle on consumers that are sub 600 and over 600. In fact, Greater Nevada Credit Union saw their users the average score was under 600 improve 184 points.
That's amazing.
That's pretty incredible. And the ones that were credit savvy, which we call in the highest credit band, actually increased 106 points. And so you're really able to provide very specific guidance based on your circumstances, is what are the things that you need to do in order to improve your credit score. And if you take that to heart and you leverage the tools that SavvyMoney provides in order to help that user along, you're going to see great increases in their score.
Yeah, and it's that personalization that Gen Z and others are wanting out of their banking as well. So that's a great 1-2 punch there.
And then in the data as well, we show competitive interest rates on average. So let's say your loans aren't getting a high click rate, and you look at the average interest rate for that particular loan in that credit band, what you might see is, boy, my A paper consumers are clicking. Those rates are good. But as I go down in my credit policy, I'm charging a lot more from an interest rate standpoint, and I'm seeing that those loans are going elsewhere. So let the data inform you as to what products you have that are good. You can also see on certain products, hey, my balance transfer isn't that good of a rate. It's not getting that good of a click rate, right? But if you look at another institution and how they're performing, or maybe they're on one of our best practices webinars talking about what they've offered, oh, wow, no wonder they're successful. They've offered a more attractive rate and they're seeing the benefits of that. So leveraging the data really to inform you as to what are you doing right and what are you doing wrong.
Yeah, absolutely. And you guys
or could do better, I should say, not necessarily wrong.
Right. Yep, got to watch your words carefully, of course. So you guys work with more than 1,300 banks and credit unions, and you just recently created this Get My Rate service, allowing users get pre-qualified for multiple offers at the same time and receive ongoing alerts as rates change in their favor, which we kind of talked a little bit about. So there are obvious benefits to the members in that, getting a better pricing in their credit. But what else are you finding?
Yeah, I think Get My Rate is the real power of Get My Rate. So a couple different things. One, if you're a paper and the rate that you're offering that consumer isn't what they want, they're able to set the rate they want and be notified as rates come down or as you change your credit policy to be alerted. So what that does is it's not a no, it's a not now, but we're going to work towards getting you the rate that you want. So it keeps that consumer in the fold. If you're a low credit band, what that's going to do is a much better experience for the user. What a number of credit unions have seen is that when they turn somebody down, they don't come back. And so if it can be a not now and not a no, and actually say, hey, you're only 20 points away or 25 points away, or work on these things, we'll continue to alert you when you get there. It changes the narrative in terms of the conversation with the consumer. When they come in, they're actually going to see their score. They're going to see the rates they qualify for now. We're also going to have them enter their income information, because one of the things that we've seen is that they meet the criteria from a credit standpoint, but they don't meet the criteria from a debt to income standpoint. So getting your debt to income in line before you apply for that loan is also critical in addition to managing your credit. And if you think about how pre-qual works today, it's a little bit flawed in that you do a one-time pre-qual. If it's not what you want, you'd have to keep going in every day. Well, that's not efficient. Why don't you set the tool to continue to monitor my credit every single week and give me updates as to where I stand? And it may be that the interest rate gets to within a close margin of what you want, and we update you that, hey, you wanted 6% and we've got 6.25. Is that good enough? And you may end up pulling the trigger on that rate. So I think it's important that it's really looking out for you, telling you what you need to be doing better, as well as alerting you when something comes in line that meets your needs.
Yeah, and on the other end, the credit unions are probably getting more loans from better borrowers, better educated borrowers. And there's a lot of other data that is included in the platform.
We're launching 50 institutions a quarter to give you an idea of just the volume of new financial institutions. And so, kind of bring you up to speed, our core product is integrated into digital banking. And so one of the benefits of that is that we're where the user is, right? When they're logging into their bank account to look at their checking account or their loans, we're a widget built right into the digital experience, both in mobile and in desktop. I did that intentionally to be where the consumer was. And our research suggests that 75% of users would prefer to get their financial wellness and their credit score and all that through their primary institution. So being in there is kind of table stakes. I was in lending for 10 years with Household, both on the branch side and on the credit card side. I left in 98 to be part of the founding team at freecreditscore.com. So pioneered the original direct-to-consumer credit score business. You probably remember those crazy commercials. You don't have to quote that in the article. But my reason for kind of building this is there's a number of websites out in the market that monetize through advertising, right? So if you think about Credit Karma, their whole thing is to get people to kind of look at their score, right? And then what do? They monetize through financial offers. And at a number of credit union conferences, when I'm there, I say, how many of you guys know about Credit Karma? And they all raise their hand. I said, how many of you advertise on Credit Karma? And they all bring their hands down, right? And so the idea, I built a B2B business. We are not a direct-to-consumer business. We only integrate with the digital banking, as well as we're outside of digital banking, maybe on their website. But the idea is to keep those consumers. You don't want your credit union members going to a financial website and then being lured away with other financial products. And so inside our product, we only market the institution's loans and deposit products. So it's very sticky. We get, upwards of 40 to, in some cases, 65% adoption of our service. So those users that are logging in, it's completely free to the user. And some of the relevance there is that they're able to update their score and their credit information every day. And part of the value of that is if you're going to apply for a loan, you want to see the most recent data that's on your credit file that's going to be on the back end pull when you apply for a loan. So super critical to have visibility of that. And then we personalize it. Personalization is very big today. It's like, well, yeah, I'm managing my credit, but like, why is that important to me? Well, you'll see in the tool when I show you, we actually look for opportunities to save you money. If you were to do a balance transfer, specifically, what would I save on interest? Or if I refied my car, or if I did personal loan consolidation or a home equity or whatever it might be, we bring that to the consumer so they see the relevance. And then we give them motivation to improve their credit score so they can increase it to a point that they qualify for even better rates through the product. So as an example, this is wrapped inside of digital banking. This is your credit score. This is actually my credit score. So I'm showing you my actual credit information. So we actually track the user's credit over time. You'll see here the impact of different things on your credit. So here is my utilization rate spiking up. So I'm what's called a transactor. And as I charge on my debt, I pay it off every month, but I try and maximize the benefit that I get on cash back or whatever it is. But I take a hit to my credit. So one of the benefits of SavvyMoney is actually having the ability to pull your credit and see when those balances are still showing up. But you'll notice here, once I pay those balances off, I don't carry any balances. My credit spikes up all the way to 816. But kind of hitting rewind here a little bit, when I log into the tool, I can update my credit score every day. Here I'm showing I had a little bit of a decline because I just charged my season tickets for the 49ers and the Warriors on my card. So I'll pay that off this month and my score will jump back up to over 800. And we break the score down into its analysis. And then credit usage, I'm getting a grade A, but it shows here that my Citibank, I have a high balance. That's one that I get nice cash rebates on. But if I clicked on it, I'm going to go into the full credit report. So I'm going to be able to see all of my payment history, everything in the report related to my full credit file that are out there. And then I've got the ability to simulate my score. So back to my situation of paying down balances. If I were to pay down my balances by 40,000, my score is going to jump up 37 points, right? I've got credit monitoring alerts in here as well, the ability to see anything that's happening on my credit for identity theft. But the real important feature inside of SavvyMoney, you'll see up here in the carousel that there's multiple loan products being offered. This is all based on the lending criteria from the lender. I'm able to overlay it on top and actually customize this tab with all the loan products or deposit products that I have as an institution. And so if I were to go in here to credit cards, I see that there's a balance transfer opportunity here. It's a little bit better than the rate that I'm paying on my cards. So I've downloaded all my cards off my credit file. Now, if I were carrying my balances, I pay mine off. But if I were carrying my balances, I could see that if I were to do a balance transfer to pay off this Citibank card, and I got the balance transfer rate, I'd save $10,000 in interest, right? And then the other powerful thing that we talked about is giving financial institutions visibility to the data. So in here, this is going to be the FI's view into the data. And we're going to be able to see everything that's happening with their customer base. This is super insightful in that for those that have their primary account by a financial institution, I want to see, are they improving their credit? Number one, where are they borrowing? What are the loan opportunities that they have with other institutions that I could market to them and potentially get loans for my institution that could better their financial situation. So it isn't just being able to offer them loan products, but offer them personalized loan products that could really help them benefit their financial situation. So the first thing I'm going to look at is wallet share, because I kind of want to know as an institution, how am I doing versus versus where my consumers that have their account with me are borrowing. So in here, we do this in a couple different ways. One, we show how many loans in aggregate are with your institution and how many are with other lenders. This gives you an idea of the addressable lending base that's available through other institutions. And if I were to break that down, I could actually go in by credit score band and see what my penetration is.
So I always offer my guests final thoughts as we wrap up these videos. So JB, tell me, what are your final thoughts about all of that we've talked about?
Yeah, I think, Sarah, you touched on it, right? So my final thoughts are leveraging the power of the data, right? So the power of the data is going to be critical. And how do you use that to answer consumer questions? Why did my score go down? Why did my score go up? What are the top 3 things I can work on? So as you think about AI and applying all that data to AI and give consumers, today we give great recommendations. I think what'll happen is it'll take in more data and be more specific as to the direction that you give consumers.
Yes, well, thank you for your time. I appreciate it.
Yeah. Thanks, Sarah.